We're live.
All right. Welcome back to another episode of Token Narratives. My name's Graham Stone, joined by Alex Richardson and David Sensel. We are going to get into some interesting topics today. We're going to talk about hyperliquid BitTensor, but of course, we also have to talk about Bitcoin and macroeconomics. So, with the breakout of the Middle East conflict a couple of weeks ago, Bitcoin seemed to react differently, uh, ending temporarily ending perhaps its correlation with equity, gold, and other markets. In other words, Bitcoin going up while everything else was not. Bitcoin ended up going as high as a little over $75,000 just yesterday, 2 days ago was the peak, and then we got some hawkishness out of the Fed. We got escalations in the Middle East. Most recently, the South Pars gas field that suddenly everyone knows everything all about that. It has supposedly 40% of the world's natural gas deposits, accounts for something like 20% of current natural gas flows to the market. 6 times bigger than the second biggest natural gas field in the world. Was bombed. A lot of the infrastructure there is apparently destroyed.
Bombed on both
Iran,
sides, the Iran side and the Qatar side.
Qatar side, Iran struck back. So the conflict expanding. Previously, targets that were previously avoided now becoming targets to hit. And anyway, all of this
But
is leading to, yeah, so Bitcoin now down, uh, pretty steep drop overnight from
no, no, no,
74
no, no.
to 70, now trailing off. And as we've discussed on this podcast, there are a host of factors. David's been itching to say I told you so. I know, Alex, you've been leaning towards as well that this was a bull trap, um, and that we just haven't fully formed the bottom yet for Bitcoin cycles and all that. Let's get into it. What do you guys think?
Well, I think this is destined to happen kind of regardless. I think. I mean, without this current escalation, um, the oil shock hasn't really started yet. That'll be coming in like the next week or two, maybe a little longer.
What do you mean
So
by that, David? Oil shock.
Well, so I mean, yeah, markets are forward looking. So they're they should have been pricing in the disruption, but if you look like the equities market, for example, um, they were they were elevated this whole entire time, and what that meant basically is that markets were expecting a taco. They were expecting a Trump taco fast, and so the disruption would have been like minimal. Um, Equities finally starting to realize maybe now that this is going to last longer than they wished, and the longer this goes, it's kind of a non-linear, as far as I understand it. It's a non-linear reaction because you have to physically start closing down or God forbid shut off some of these oil fields, and it takes a long, long, long time to reopen them. So the people that I follow and I listen to were even before the things that happened today were saying that um, equities hadn't properly priced in what was going to happen, and maybe now they finally are starting to. But this reaction with Bitcoin, it just seemed like it was like a classic response of it went down a lot, and so it was getting some relief, right? Because of all the usual things, it was oversold. People started shorting the bottom, all this kind of normal stuff, and so the fact that it kind of pushed up is just normal. Nothing
Bear market rally.
bear market rally. Nothing had really changed. AI was still what everyone was talking about. Um, you're in the middle of a conflict, and any kind of oil dislocations hadn't really been felt yet, right? The actual lack of oil hadn't been felt yet. People, countries are starting to tap into their reserves. We talked about some of this stuff, and Alex and I touched on it in the newsletter. So again, it just seemed, from my part, it seemed my base case was that this was gonna roll over at some point and go down and probably test the lows, right? Like I'm expecting it to test 60 eventually. Uh, and so again, nothing surprising there from my perspective. Last week, I think in the week before, I was saying like, you maybe just it's risky out there. Maybe just wait and see what happens. No need to get in now. So
Yeah, well, how about gold? So gold is rolling over. Let me bring up the gold
exactly.
chart.
I I I'm gonna write about this in the newsletter tomorrow. So there's a story. I think it's, who is it? Seifert maybe, who is speaking about it. But the theory basically is, wouldn't you know, during a conflict over oil, sovereigns start to sell everything they can, especially the most liquid thing that they have, especially the thing that hasn't dropped in value, like COVID, like we've said many times before on this program, uh, Graham. So they're selling gold for oil right now, right? So they're selling this liquid instrument that hasn't fallen that much compared to maybe some other things, and they're buying oil because they you need oil. You don't really need gold, at least in the short term. So that's been one theory, is that sovereigns in particular are selling some gold for oil.
Interesting.
Yeah, and remember, like we've said many times before, that what we saw in that COVID crash, the COVID flash crash, oil uh, went down. Um, the I think it went down really hard, really fast, and it preceded much of the equity move down, um, because people had to sell gold to support their underwater positions um, in equities. And obviously, it rallied really hard too. But you know, again, just because it's like this whatever hedge against risk doesn't mean that when everything gets really risky, you don't have to tap that
All right.
insurance policy.
What about the high priests over at the Fed with they did their thing. They sacrificed the goat. They pulled out the entrails, and no rate cuts or something. Isn't that what happened?
Yeah, basically, from what I listened to a couple people like Bob Elliott with unlimited, whatever his thing is, unlimited blah blah blah. Basically, it was kind of a nothing burger, right? Like there was no surprise in what the Fed did, and in Powell's comments, there was no surprise. It was very much middle of the road, and I think the comments were basically. Um, some of it was dovish, some of it was hawkish. The overall message seemed to be, which I think is a good one actually for coming from them, was basically like, we don't know what's going to happen because there's a war going on. So we're going to do nothing, and you should do that too, which I thought was actually good advice. Uh, so that's what was what I heard.
All right, Alex. What do you got? What's the grand plan here with the Iran conflict? Put on your macro hat, geopolitical specialist hat.
How does this
Uh,
end, Alex?
I think it ends with markets going up eventually. I mean, you can spend hours putting on your geopolitical hat and analyzing the oil markets, but uh, the edge that you're going to get from that, at least from my perspective, is pretty low. I would rather just look at basic metrics. Like the vibe is definitively risk off, isn't it? Like this is probably a time to be raising cash in preparation for the next pump. Because the dollar's pumping, we're back above 100. The VIX is pumping. Obviously, oil and energy are pumping. The rate cuts are being pushed back. I mean, like part of me wants to block it all out and remember that Michael Saylor said Bitcoin is a swarm of cyber hornets serving the goddess of wisdom, or whatever he said. So it doesn't matter. But I just think a responsible thing to do is like just give the market cycle a little bit more time. See what the stock market does. The indices are definitely rolling over. I think the 200-day moving average on the S&P is still like 10% away. Um, so you need to wait for that to play out. And if the dollar is going to be pumping, yeah, it's going to be a good time to be accumulating cash. The classic TA thing to do with Bitcoin, I would say, is probably see how it reacts to the 200-day, which is around 80K. And if it rejects, then I'm also, like David said, looking for a yearly low or at least a double bottom at around 60K. And I think last week I said the bullish argument against that is ETF buyers don't really care about the 4-year cycle and they might just end the bear market sooner. But yeah, I think if your time horizon is like more than a year or two, then you're not going to regret bidding anywhere between 70 and 50K. Same with gold, honestly, probably. If you're looking out far enough, I still believe in the Luke Gromen thesis that we're gonna have Argentina with American characteristics, and you might not be profiting in dollar terms, but everything is going to inflate over the next 5-10 years. It's just like the late stage empire characteristics. So regardless of what's happening in the Middle East, I would just give it time rather than trying to analyze everything and catch bottoms.
All right, David, I'd love to get your thoughts on the grand plan in the Middle East. Is Trump, is this 40 chess from Trump? Is he being
Yeah.
controlled by Israel? Is this going to end in the West dominating Iran, bringing Iran into the fold? Is this
Well,
yeah,
there's a bunch of different ways you can take that. Before I start down that fun conspiratorial path, though, I'd just like to point out um, where oil is priced at in December of 2026. Right, so you have oil futures, all commodities. There's really no like set price for a commodity, right? It's usually just kind of when you buy it. I just want to curious, where do you think oil is? Don't look. What does the market think the price of oil is at 20 December 2026 right now?
40% higher?
So what?
140.
So 140. Alex,
120.
80. It's pricing it at 80 dollars. So basically, the market is pricing that this conflict will be resolved and will settle probably well before December. But the kind of the baseline for the price of oil will be quite a bit higher, right? So before this conflict started at the beginning of February, end of January, it was $60 a barrel. So if you think about it, 60 to 80, that's a pretty big price increase to like with no conflict and no problems whatsoever. Just if you look at it from that term, from that perspective, that's not really great for that's not a great setup for like equities for inflation, right? If the no risk, there's no conflict, there's no world problems, but now the base level price of energy is that much higher in a year. Bad for inflation, bad for Fed rate cuts, kind of not constructive, I think, as just like on a baseline. Anyway, so that's to me is is where you should start, and then maybe project out, like, because that's like if everything good happens, right? If the conflict ends today, or whenever soonish, and things can return to a baseline, $80 a barrel. As to what the what's happening here, I'm gonna put on my what's it called,
Tinfoil hat.
my Zehan,
Peter Zahan.
Peter Zehan, global strategist, monitoring the situation, PhD, CIA hat. Really, it's really hard for me. And again, I'm an American, so I'm very biased. It's hard to imagine that this is this can go badly, like really badly for America. Um, Maybe for the reputation of America, but I mean, I don't know. I don't really put that much weight in kind of things like that, right? So America is the number one oil producer, so that'll be good. Um, we have Canada, who is going to be the 51st state, so they'll start producing more oil because of this, and they're already kind of hinting at it, being forced to do that. That's a good thing long term. We have two oceans separating ourselves from any real enemies. Our sphere of influence in the Americas has pretty much been cemented with Venezuela, and Cuba's probably next, and something like that. So just in terms of security standpoint, it looks pretty good. Who are the biggest losers from this? Like, even if it ends today, or let's say it gets worse, who are the biggest losers? Well, definitely Asia, and then within Asia, China. We're not like the best friends with them, so that's not bad for the U.S. It's probably bad for Russia, right? I don't know if you guys have seen any of the info coming out, right? But you know where Russia was getting their drones, right? And they're not getting those drones anymore from Iran. Um, Russia's shadow fleet. I don't know if you saw this info for the past 3 weeks. It was ever since the Ukraine war broke out, the EU was doing what they do best, which is talking, and doing nothing else. We're going to sanction oil from Russia. We're going to stop it. This is not happening. None of it was sanctioned. None of it stopped. Not a single drop was prevented. Well, now it has, for the first time ever. 3 weeks ago, you had, I think, the Danes. They confiscated a tanker from Russia. 2 weeks ago, it was like Norway or something, and then last week I think it was the French. So they're finally being forced to deal with like this Russian shadow fleet. So that's probably not great for Russia. It's good for the EU to finally have to do something about it instead of just talking. And bad for Asia, right? It's bad for Japan, probably bad for China. It's the longer this goes on, it'll be bad for Trump. Really, 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 really bad for him, right? Because of inflation in the U.S., it's going to kind of torpedo the economy. And so, from that perspective, I don't know why this happened. You can kind of guess. There's lots of reasons why you could imagine why this happened. Maybe he thought that this was going to be fast. I have no idea what the heck was going on. But in terms of like longer term, it actually does kind of make sense from like a long-term strategic perspective. So I guess that's kind of the silver lining for an American and a Canadian, because I think it forces these milk toast soy boy countries to finally realize that this is like a real deal. So you're welcome, Graham and Alex. You're welcome.
Thanks.
I don't
man.
know. What do you think, Graham? What do you think?
Yeah, what you went over there, I've seen those angles in my timeline. Okay, like who benefits from this, and who are the biggest bit winners, who are the biggest losers, and in most cases, Yeah, like at least in America, the empire does well in most scenarios. So I'm not sure what that means for my crypto bags.
For your crypto bags, yeah, that's the big question for me. And honestly, like I said before, the conspiratorial stuff is just like, again, best case scenario. Let's say, like, I tend to be, not tend to be. I'm a wet blanket. I love this stuff. This is like catnip for me, right? Doomer stuff. I love this doomer crap. Um, the chances of it getting really bad are low though, right? Like it's going to take another month or two, probably more than 2 months, like 3 months, for oil to spike to 200. Be about 2 months, maybe 3 months from now, and then it spikes to 200 or 300 or whatever. You'll start to see some like just crazy crashes, right? You'd imagine equities go down like 20% in a day, whatever, this kind of stuff. Um, but that's a long, long ways away, and that's a lot of pain that nobody wants to take, right? So I think the likelihood of that happening is low. But again, just in the base case, higher oil is at so oil's at 80, inflation is there was a print this week, right? It came in hot, right? So we're already getting elevated signs of inflation before this oil thing has really even reached the final consumer. So the Fed cuts now, if you look at the probabilities, they went from in January, it was more than three. That was the probability, more than three cuts for 2026, right? Now, as of today, it's zero point 0.5. It's a half a cut. It's not even one cut, right? I don't even know what that means, but for the probability is maybe we'll get half a cut sometime this year, and it's rapidly declining. Um, so equities probably don't do well, right? Um, if equities do poorly, does crypto do well? I don't think so. I don't think so.
Yeah. Maybe just one thing I would add is one thing I've noticed that is every time there's a geopolitical conflict, at least in the last 20 years, uh, yeah, markets tank, there's chaos, and then 3 months later, you're back at new all-time highs.
Do you think? And this is a real open question. Do you think there's appetite to do a lot of printing of money if the inflation is at like 4 or 5% by that time? I don't know, man. Like that was political like devastation last time around COVID. That like that inflation thing was no joke. I don't know. I mean, I guess Trump doesn't care, so maybe. The thing is, what I've heard is from the commentariat is uh, even if even if Trump gets his hand-picked person, the Fed, the federal, the chairman and the board itself, they're not going to be lackeys, right? They're not going to want to print the way they used to if inflation is already at like 3 or 4%. So are you going to see just this like massive money printing event? I would put it at like 60-40 no. So in that case, I don't know. I don't think you're going to get that gasoline.
All right, Alex, anything to add on this? Yeah, like the big picture stuff before we move into some of the crypto weeds.
Um, I do think that on a long timeline, war is generally good for crypto because it drives an already accelerating lack of confidence in the nation state. Like, for example, the Iranians are a pretty obvious example of a people with like maximum uncertainty and lack of confidence in their nation. They've been living under what some would call an occupational government. Their currency went to zero. There's missiles flying everywhere. Their country's uninvestable. And what happened? Stable coins were exploding. Bitcoin was leaving the exchanges. And you saw something similar in Ukraine and Russia. And I might be reaching a bit, but isn't that like kind of the same thing that's happening in the West, but just on a much less extreme and longer timeline? Just like a gradual loss of confidence. Living standards aren't really the same as they were 15 years ago. People are stressed out about affordability. Urban centers aren't as safe as they used to be. The taxes are insane. They're talking about wealth taxes. And I don't know. I don't want to sound like a doomer, but I do think that this like general lack of confidence and the evident incompetence in most big governments, that's what's driving. It's one of the big drivers of the rise of digital assets. And if the U.S. screws this war up and there's lots of casualties and it never ends, that's going to be a pretty big blow, I think, to the confidence in the Trump administration, because this is like precisely what, or one of the main talking points of this campaign was to avoid these never-ending wars. Like we wanted low taxes and securing the border and low inflation, and now we have high inflation and another stupid war. And I just think that it's driving a lack of confidence, and that's one of the core tenets of what Bitcoin was supposed to be, like a hedge against all of this.
Yeah, so maybe on the short term, things like David's talking about, yeah, like markets are rolling over, and Bitcoin is just like plays plays like a tech stock, so it's going to get crushed. But Alex, you're pointing out the longer term gradual adoption story, and this type of chaos and incompetence and just like the powers that be not having like the average Joe's interests at heart whatsoever, driving the long term adoption of digital assets. And so we got these like two sort of competing things: the short term view and the long term view.
I would I I'll save this for another episode where I can argue with Alex more. Maybe we do it on live stream and Rumble. But I disagree with kind of his thesis in general. I think if you like look at like the Michael Howell fourth turning kind of deal, we're kind of at the late stage of trust in institutions and government. I think you'll probably see if anything, a swing in the opposite direction eventually. At least that's what I'm optimistic about. But just to give a little hopium about from my earlier words, like what we talked about last week with Neil Howe, fourth turning. Sorry, Michael Howe. Bitcoin it leads, right? Leads equities going down. It usually leads all these kind of downward moves. So I mean, you really could see a case. This is where I'm unsure where equities puke, things kind of turn south for a while, but Bitcoin is the first thing to recover, right? And it recovers hard. You also see all these stories. I don't know if we already covered this. Did you cover this story? This hilarious Vanity Fair thing. I saw this.
Let's bring it up.
I saw this and it just filled me with glee, because it is no joke though when you get like tons of this stuff kind of appearing in like mass media, the public persona, the public perception of crypto. It usually portends kind of you're nearing the end of bad things than the beginning, right? And there's this hilarious cover, right? You could just imagine this cover, whoever shot this cover, making it and thinking that they're so funny. It's just, but it's basically I think it was like a thinly veiled attack on how crypto is unserious and filled with idiots, redacted idiots, from like some kind of, I don't know. You know what they look like? They look like a 1990s Japanese drama, right? That's how they are all dressed and situated. So these kinds of
It's a
things
real freak
are
show here in this cover.
yes,
Cover
I
yes,
here.
can't
We got
believe
Mike
Novogratz
Novogratz
agreed to do that.
in a
Like, can you dress
red
up in a red
suit,
suit and let us slander you? He
yeah. It's
agreed.
just
Why?
so
and
it's
Kathy
so
Wood in the
bizarre.
back there. Yeah, this other guy
Yeah,
with no shoes.
yeah.
Is that
So
Melton Demoir or something? I believe.
I felt
Demirs.
happy. I felt happy that
Demirs.
I didn't know about half of these people. I was like, oh, good. I don't know these. Anyway,
Pretty sick nail
um,
polish there, though.
this is great. These are great counter signals. They truly are. All we need is we need like Bloomberg and FT, maybe Time Magazine, to put out a couple cover stories about how crypto's extinct. This is the by the way, this is the new. I think I posted about this. This is the new kind of attack on crypto, which is like crypto demoralization, basically. And you're seeing this within the industry as well. So I like that it's kind of like these people outside of the industry have learned a new way to attack crypto. It's no longer that we're a Ponzi or that we're just scammers and we rejects from like real tech. It's basically saying that basically everyone is sad and a freak show, and anyone who's left is unserious, right? And so, to me, this is a good sign. I don't know if you guys actually take any credence to that, but I do. Bottom signals. These are bottom signals.
Yeah, I think that's a decent bottom signal. And FT and the other publications have been grave dancing the whole bear market. So I think we're most of the way through this. That's why I don't think we're having dramatic lower lows, just like something below 60K.
Yeah. When Bitcoin started running over the last week or so, I started getting FOMO and thinking, why? Why didn't I DCA more? But I don't know. With this latest pullback here in the last 48 hours, I'm thinking, yeah, we're probably gonna get back close to those lows again. I don't. The consensus is, like it's gonna hit 45 or 50. It seems like most people think that. And as we know, with these bear markets, whether it's on the upside or in the market cycles in general, whether upside or the downside, it never gets to what the consensus is that people think it's going to get to. So you don't be careful waiting for too long to deploy your dry powder if you have any, because the FOMO kicks in hard.
Yeah. Now, the one thing that I don't like to see, having just said that, is all the traditional financial media really ass kissing Hyperliquid. I know we're about to get to that, but like for the past 3 weeks, I think what is Bloomberg has mentioned that has written basically whole stories on Hyperliquid. Financial Times just did this week. So that's been kind of like one of the maybe the only bright spot of the crypto market, and it makes sense because an exchange, 24/7 exchange, doesn't really care if the price action is positive or negative, and so it kind of makes money from both. But I hope like the Financial Times or maybe the Wall Street Journal. Oh yeah, the Wall Street Journal also they had an article this week. I hope they come out with an article soon saying something like perpetual derivatives are now legal in America and Hyperliquid has no moat. It's going to zero, and so is every crypto perpetual exchange. I'll be like, oh, time to buy.
All right, what else do we want to talk about with Hyperliquid? I see you've got you got several paragraphs with bold sentences here in the doc.
Yeah, this is not AI. This is totally my own research.
That's how you write
No, but
bold. Just
yeah, always. Oh yeah, definitely. Gotta go bold. No, but really the only like real story here though is just that the did you guys see this story with the S&P 500? Um,
Yeah, pretty insane.
that's crazy, man. That is truly wild.
I didn't
Um,
see it. Tell me.
Alex, do you want
Yeah,
to talk about
the
it?
sure, the S&P Dow Jones indices, they licensed the S&P 500 to trade, the company that owns Hyperliquid, Trade XYZ, for the first licensed S&P 500 perp, and that's going to be on Hyperliquid. So, yeah, it gives eligible non-US traders 24/7 on-chain access to the index. So yeah, that's pretty amazing because we've been talking about how to get how to get dollars from around the world to flow into U.S. equities, and this looks like this is it.
Well, I'd push back on that a little bit because it's perps, so you can't invest. You just have to trade. Like if you can't just like buy it and hold it for because that it's not like an index fund, right? Because
Yeah,
if you
but
do that, you're just going to get wrecked because the cost that you're paying to hold that open.
this is true. But the and so it does depend on how you want to express this trade. But the derivatives market is was it 10 times, 100 times bigger than the spot market, right? So people want leverage, and institutions want protection. So the appetite for derivatives is kind of unquestionable, um, and perpetuals. Again, it depends on who you ask, but a lot of the tradfi people that I follow have said that like this could unironically be the greatest invention that crypto has made. Like it wasn't even Bitcoin. It could have been just the perpetual. Just I mean, obviously they're being facetious a little bit, but I mean seriously, it's like that. It's like that big of an innovation, right? Futures, um, okay. Options terrible for most people, and perpetuals is just like a better instrument most of the time for leverage. So it's pretty crazy to see that that you have this like ultra tradfi uh, company choosing Hyperliquid, um, partnering with Hyperliquid. Like they could have spun up their own thing, I suppose, right? So I actually don't even understand why they went with Hyperliquid. On honestly, a little bit. I guess they just think it's the winner. It's where the liquidity is. It's a winner take most, right? That kind of thing. So maybe that's why. Maybe
David,
yeah.
I want to ask: are you a buyer of Hyperliquid here? I can see the market cap of the token is around 10 billion.
I so
I
full
meant
disclosure.
you mentioned that you're looking for a dip.
Yeah,
No,
I
full
again
disclosure, you are a big
full,
bag holder.
no. So I was a big bag holder, and then um, I guess when November I cut about
Oh, you
half
sold the
of it.
Pico top. Nice.
Not the Pico top. It had come off a bit. But yeah, but I sold about half. I have a long term bag that I haven't touched, but I sold half, and then I just had half sitting there in cash basically on Hyperliquid exchange, and I've been kicking myself for not buying at like in the 20s. Um, it's
Now
I
it's
still
back up to where it was in November.
yeah, exactly. I still think that again, the things that I said for the past couple of weeks, which is I just don't feel very comfortable deploying capital now while there's so much risk in the world. I just rather wait until I know what the fuck is going to happen. Sorry, until I know what's going to happen. Because like seriously, it's so weird. if Trump can taco, or he's allowed to taco, because Iran doesn't really want to do anything right now, this could all end tomorrow, right? And you could see like a massive, and then risk clears like in a big way, and I would probably pile into Bitcoin and Hyper and a couple others immediately. But until then, it's just like there's just feels like there's so much more potential downside, and so why take that risk? I've already made some decent gains. So
All right.
no
So
rush.
David's sitting on his hands, waiting for more pain, getting in, buying the bottom, buying the dip.
Not even the bottom, right? I'm fine with it.
You're waiting for a turnaround, a clear turnaround.
Yeah, yeah, something like that. Yeah. And yeah, that's kind of how I think about that. Did you also see there was like a news this past week? It's hyperliquid related, but like the other perp dexes. So there were posts on like where's Aster? What's going on with that? And then lighter, right? The perp dex lighter. By the way, Graham, did it ever strike you as strange that like the lighter founder was on like every other podcast for months over and over again?
No, that's standard practice. All those podcasters got allocations, obviously. It's all just like one big
It's so funny.
Not us.
Well, no, we're pure. I wouldn't. You're not allowed to come onto this podcast, sir.
That's right.
Vlad.
Keep it pure. No shills.
Yeah. No shill. Oh God, no. Of course not. But no. So lighter apparently has lost a lot of market share. It's no longer talked about that much. It does seem like Hyperliquid is kind of has been settled upon as the perp dex winner.
Yeah.
I don't know, Alex. Do you have any perp? Oh, sorry, hype.
I don't own any hype, but I do think this is like a winner takes all scenario. And I think in hindsight, it's going to look so obvious. Like all these complex DeFi apps and protocols, who would have thought that people just want a nice place to trade? Like just an easy, nice place to trade with good UX. For what it's worth, in 2021, looks like Uniswap went to 21 billion market cap. And what are we at now? Hype is at 9 billion, 10 billion. So it's still relatively cheap to that. I mean, Uniswap was like supposed to be the benchmark place to trade, and it looks like Hype is gonna steal that. I know it's not like it's apples and oranges kind of, but it's still like just the DeFi place to trade. And I'm not saying we're gonna have the big speculative fervor of 2021, but I think just looking at those numbers, Hype is still pretty cheap. You're probably right in the short term to get a dip, and maybe this isn't the best time to buy, but this thing could go so much higher, I think.
All right. I said no shills on the podcast, but
Sorry.
being the marketing guy, no. I'm about to shill something because it's hype related, right? Because Hyperliquid, obviously, yeah, people want to trade. They want to get the leverage. They want to, they want to do the perps. Okay. Now, Bitcoin.com has a Hyperliquid front end, but so it taps into the Hyperliquid liquidity. Now, why would anyone use that? You may ask. When you could just use Hyperliquid. Well, the answer is that it's on mobile. It's like on an app. So check it out, man. It's good. orangerock.com. It's basically as good. It's essentially Hyperliquid, but actually, I don't know. It's on mobile though, right? So you can be in the bar, out and about,
looking at oil,
completely degenerate with your trading.
Yeah, I would say this. I mean, this is another thing that Hyperliquid did really, really well. That turned out to be right. I remember these conversations when the lighter guy was making the rounds for like 10 months. on every podcast that I listen to 20 times, and I heard this, I think, at least 5,000 times. But basically, Hyperliquid decided that they were just going to focus kind of like on the kind of the base layer of the trading thing, and they weren't going to really go into the front end stuff, right? Like a mobile app, or anything like that. They were just working on that kind of level of liquidity. Um, and lighter, if I believe I'm correct, any lighter lovers can roast me in the comments. They controlled the full stack, right? So they weren't really. I don't think they were really allowing people to do what like Bitcoin.com has done with Orange Rock, right? Like allowing competing front ends, you know. And so, but it looks like the correct thing to do was to, I mean, at this point, is to allow Hyperliquid to be kind of like this liquidity base layer for perps, for perpetuals. And by the way, Graham, I know I'm not the marketing person, but I liked something you said. I think you should consider it for the slogan for Orange Rock. People want to do the perps.
I proposed that, but it was rejected.
Oh, come on.
We're going with trade without limits.
How about do the perps?
People want to do the perps.
I'm
Give me
gonna
the
say
hat.
that.
Give me a hat.
I'm
I
gonna
want a
say that
big
when
hat.
we're
Do
at
the perps.
when we're at the teams. I'm gonna be saying that a lot. Like Orange Rock, do the perps. So anyway, I thought that was great.
All right, let's get into our topic for the week, which is BitTensor for the third week in a row. Last week I said we got to do our homework, and since I don't do homework these days, we asked Alex to do the homework, and he's done it.
I'm not in
So,
grade
Alex,
school. I don't pee my pants and wet my bed. I'm a big boy.
Alex,
So
you've put hours into this. You've been deep in the BitTensor trenches over the last week. I've seen you posting links to like the subnet dashboard. It kind of reminds me of Dex Screener. Um, I'll bring it up here as you. I don't know. That's my intro. Tell us more. What's happening?
You're making it look like a top signal now. Now I feel pressured. Well, I don't know. What do you want to talk about? Do you want to just like do a quick summary of what it is?
Yeah, yeah, that's a good place to start.
All right. Okay. So BitTensor. So right now, AI is controlled by a handful of companies that are centralized, closed off, really extractive, and likely to become more extractive in the future. Because as AI makes the world more competitive, and there's like tens of millions of people desperate to become the best engineer, the best programmer, the best designer, it's definitely going to drive the demand for AI way up, and we can expect our monthly ChatGPT subscriptions to get extremely expensive. And on a long enough time horizon, it's going to price out most people from participating in what's probably the most important technological revolution ever. You can't invest in OpenAI because it's private. Anthropic is private. The other AI pure plays like Google, Nvidia, Meta, they're already mega caps, so that there's not really any value capture for normal people. You also have no say in how they design their products, so it makes us vulnerable to censorship, bias, propaganda. Imagine one day asking ChatGPT a question and it refuses to answer, and it like puts you on a government list. I think that's like a realistic scenario. One of the BitTensor guys said in a recent presentation that in the AI industry's current state, we're looking at another quote totalitarian corporate system where everyone's money just goes to these AI companies who control the world, and they'll essentially own the mind that we use to think and do stuff, and they might claim ownership over stuff that we use their tools to create. So we're kind of like sleepwalking into hell right now. And anyways, this is what BitTensor aims to address. It's a decentralized, incentive-driven economy for building AI models and AI infrastructure in like a collaborative, competitive way, so that AI becomes more of an accessible commodity rather than an extractive, like closed off SaaS industry. And the way it works is there's 128 different subnets, and the subnets are like little AI companies competing for capital allocation. And the way they compete is tau holders can choose to stake their tau to those subnets. And when you stake to a subnet, your tau gets swapped to that subnet's token, which makes the token go up in price. And if no one is staking to a subnet because they don't believe in it or they don't need it, then the subnet token goes down in price. And whichever subnet has the lowest price of all of them, they get eliminated from the network the next time someone registers a new subnet. So that's what creates this like competitive Darwinian nature of it. And the idea is to basically have the whole internet develop and benefit from AI rather than leaving it up to a handful of megacorps. So yeah, that would be
How
my
does
brief introduction if you want to double click on any of that.
I don't want to double click on anything ever again. No, no double clicking. But I will ask you a follow up question. Um,
All right, good.
Alex, double clicking is that's Graham's speak is rubbing
It's
off on you.
everyone's on mobile. You tap, all right?
Sorry. Such a boomer.
That's hilarious. Okay, no, it. So how does the actual network setup look like? Is it proof of stake, and do you have validators and stuff, or are there actual GPUs somewhere doing AI work? What does this? What does it actually look like physically?
It's proof of stake, technically. Uh, so yeah, you have miners and validators the same way that Bitcoin does. The miners are basically operators that generate outputs for the subnets. So they run the subnets miner repo, like the software. The validators assign them a task, and then the network uses a consensus mechanism to determine how much each miner earns. And the miners are rewarded in tau and the subnet's like native token when they produce useful output. So like if you wanted to compare it to Bitcoin, Bitcoin miners compete to validate blocks according to the proof of work consensus. And in BitTensor, miners compete to produce outputs for the subnets, and the validators reward them for their work. So, and in Bitcoin, inflation is distributed directly to miners who solve the hash. In BitTensor, inflation is awarded to the miners who produce outputs for subnets. And the tokenomics are also similar. BitTensor has a 21 million hard cap and a 4-year halving schedule.
And so, but these outputs, unlike Bitcoin, these outputs are actually useful work, right?
Yeah, it's not like a plug and play thing. Like in Bitcoin,
Well, it's yeah,
anyone
so
can mine. You just turn on the machine, and I mean,
yeah,
you're more likely to
but it
profit the
also
more hash power you have. But
yeah, but also in Bitcoin, they're solving a useless problem. Like it's
yeah,
an exercise. But the BitTensor stuff is actual like AI, I guess, logic, basically, right? Like you're running some kind of inference, I guess.
yeah, it depends on the subnet that they're mining, and each miner kind of has to be somewhat specialized in what that subnet is doing. You you kind of you can't just like set it and forget it. You kind of have to know if your subnet is doing inference or if your subnet is doing, I don't know, image generation or drug discovery or something. Then you have to be somewhat familiar. Otherwise, it's going to cap your gains because you're not going to know which outputs to submit.
And also you can probably optimize your hardware or whatever hardware software stack so that you have a better chance of submitting the work faster than in an unoptimized stack.
Exactly. Yeah.
Okay, cool.
Um, so I'm looking at the this list of subnets, and I'm seeing if you put it on the ranked by 1 month, uh, filter to rank them by 1 month. I'm seeing a bunch of subnets that are like up 5-6x over the last month, and then at the bottom Let me switch that. Yeah, there's a bunch that are down. Well, there's one that's down 99%. A bunch that are down,
If
and then I'm
if you
seeing
click
other
on
things like
price,
there's
it'll organize them by like the biggest ones to the smallest ones. Yeah. So shoots is the biggest one.
did it backwards there. Okay,
Yeah.
and then I'm seeing things like incentive burn 0%. Some of them are zero. Some of them are 95%. Some of them are 100%. What is the incentive burn? Do
You
you know what
got me
that
there.
is? Okay.
No, I don't know what the incentive burn is. The
Oh well, there's
the
My
current burn
guess,
the
rate percentage. It says. Okay. Anyway.
my guess
yeah, there's
is
so many metrics here. It's insane.
one of the biggest issues I've heard with the subnet stuff is the subnets basically get a subsidy, right, for uh, of Tau, um, and the big question is, can any of these subnets um, produce revenue on their own, as in do they or is almost all of their value just currently from the subsidy that they're given from the network, and I wonder if that incentive thing is related to that. It's like how much of the subsidy are they using, or are they banking it? um, it seems like it's an open question whether any of these subnets can be like cash flow positive, number one, and number two, if any of them have a real moat, right? Like something that can't just be copied by somebody else, so by another subnet or another project completely.
Yeah, BitTensor network distributes tau emissions to the subnets based on how much tau flow is going into it. So if lots of people are staking to a particular group of networks, group of subnets, those subnets are going to get more tau emissions. So it makes it harder for the smaller subnets to keep up, and it incentivizes more people to pile into the big subnets. So that's how the tau inflation works. It's not, they don't just evenly like throw tau at all the subnets. It's according to which ones have the most stakers or the most tau in their tau reserves. Because when you stake, you're not really swapping. You're putting tau in a pool, and then in return you get the subnet token.
Yeah.
And yeah, I'm not sure like if any of these are cash flow positive or if they're just surviving off of the tau inflation.
Yeah. Do you know? Is there any reason why? Is there any reason why these subnets don't have their own project completely? Or like, let's say a subnet became popular. Why wouldn't they just spin up their own network? Do you know what I'm talking about?
Well, I guess it's profitable to be subsidized on BitTensor, and also some of the subnets interact with each other because they might use the services of another subnet to perfect their own. So it becomes this sort of like networky brain, and it's beneficial to have a network of different services rather than operating as like a single service company, because you can't really do much with just inference or just compute. All these are working together to generate different products. So that could be the argument as why you'd want to be in the BitTensor ecosystem rather than just a standalone company.
I see. So Al God, we've talked about him before. He seems to be interested in Tau, although I believe I've seen posts of him saying that basically all of the subnets are trash, and just a couple have real merit. Can you expand upon what the hell he means there by that? Is it? I guess it's analogous to like just crypto tokens in general. If you just look at like a list of like the top 200 projects, most of them are going to be kind of crap anyway, something like that
Yeah, I
maybe.
mean, it is basically a liquid vaporware right now. So that is the risk that you're taking on with any new project. Um, like so for example, the biggest one is Shoots, and Shoots does inference. Inference is the phase of the AI stack where an LLM applies its knowledge to a new situation. So the classic example would be a self-driving car using its training to go down a road it's never been before, or like an LLM answering a question about how to tune a piano, even though it's never been taught anything about pianos. And inference is important because it's what provides the final product for end users. Then there's a Templar that does LLM training. Metanova does AI drug discovery. Ridges is a platform where you hire uh, software agents, like autonomous software agents, to do stuff. So they are doing like real services that are necessary in the world. But yeah, you're right that the big question is like how could they possibly compete with ChatGPT or these big companies that have really slick apps that are already on everyone's phone and really easy to use. That remains to be
Or
seen. Maybe go ahead.
oh, I was just gonna say like, or like, so for example, you said Shoots is the number one. The thing that would strike me about this is like, yeah, it's important, I guess, to have a subnet or maybe several subnets that do this, but this just seems more like a like a what's it called, a commoditized service. So the value of it would just kind of be compressed, right? As it's like a race to the bottom to do that. It doesn't seem like that would necessarily have high value add on top of just being able to do it as efficiently as you can and with the tiny margin. Do you know what I'm talking about? Right? Like, so for that, it seems like, yeah, you need that. That's crucial. That's critical. But it's like you commoditize that, and so maybe you'll always have, I don't know, 5, 6, whatever, 10 subnets that do that, and they just compete on kind of tiny margins. But then the token or whatever they have doesn't strike me that it would be particularly more valuable than the inference than they actually are able to handle.
This is one thing I don't really understand is the stated goal of BitTensor is to turn AI into a commodity so that it's cheaper and available compared to spending a lot on ChatGPT subscriptions. So like, how do you balance making it cheap and commoditizing it, but also making all these subnets profitable? It remains to be seen, and that's like the big question here.
Yeah. What's
Okay.
the can I sorry, one more thing. Why did the price jump recently?
Well, it went down a lot. I mean, if you look at the long-term chart, it's not really doing that much. I think one thing that helped was one of the subnets is called Templar, and Templar recently completed the largest LLM training of all time. I believe it's like 7 times bigger than the second largest one, which is done by OpenAI. Also, it's being hyped up. Like Jason Calacanis
Right, of course.
he did 2 podcasts on it. He did one on Tau itself, and one on one of the subnets called Hippias. And Jason Calacanis from the All In podcast, he runs a venture capital group called, or he's a partner in Stillcore Capital, which is exclusively focused on the BitTensor ecosystem, and he's recently been kind of pumping it online.
Of course, of course. That's why. Right. The age
Yeah.
old Graham. Got to sell your bags. Got to pump your bags.
Yeah.
You know what's a good slogan? People want to do the AI. How about that?
Yeah.
People.
People want exposure. That's how you started this off, Alex. Is people want ways to invest into AI, and there aren't that many ways you can do it unless you're like a private office or whatever, an institutional investor. If you got billions of dollars to buy it to like build a data center or whatever, you get on the private round of OpenAI. So people, yeah, us retail punters out here, we're looking for, yeah, we're looking for things to gamble on, and
Yeah.
there might be something to BitTensor. So I think we should keep watching this. I want to keep digging into it. Alex, please bring us more gems from the BitTensor ecosystem.
Yeah, I mean, I got to be careful with that because these are. I think the largest one right now is 80 million market cap, and then as you go down the list, it just gets increasingly more uh, speculative.
Yeah. Well, we'll just set up an agent or something to auto trade them.
That's a big thing on BitTensor. BitTensor is totally accelerating the crypto was made for machines narrative because the ecosystem is like perfect for AI agents. If you think about it, who would be better to onboard into a decentralized AI economy than AI agents themselves that already understand all this
Ah,
crap like way better than us? Like, are we going to make smart decisions about which subnets to allocate to and which inference is needed for a particular service, analyzing all these different analytics on tau stats, or is an agent going to do that? Like, it's at such a level of complexity and sophistication, the whole AI stack and the AI infrastructure that I just don't really see humans being able to do this better than agents. And the BitTensor founder explicitly said, I'll quote him, Const, he said, BitTensor will be run by agents. They will feed the mining, resist the exploits, manage the fleets, build the subnets, and consume the commodities. So that's pretty insane. And he also launched his own bot, which bought its own subnet. Subnet 97 is called Constantinople. That subnet is bought and controlled by an agent. Like it's getting out of control. So I think the
yeah, I
people
think
that
that's
have
the
been
one that
hyping
was
up the
up
go
500% over a month, I
yeah.
believe.
So I think people that have been hyping up the agentic adoption of crypto, like
Yeah,
Haseeb and Brian Armstrong, Raul Paul, they're all going to be vindicated in the next couple of years if this continues.
yeah, that's just definitely a strong narrative for Tau and the Tau ecosystem, the BitTensor ecosystem. All
Yeah.
right, let's wrap it up there, guys. Yeah, interesting stuff. So, yeah, got nothing else to say. We're done. Have a great week. Adios.
Adios.